Look, I think the pullback in the dollar at the moment is temporary. Part of it is positioning. We know that the market participants got very long dollars, particularly over the early Feb, and we've seen a pullback. And a couple of reasons for that. One, I think markets have sort of conditioned themselves to the tariffs, given that there hasn't been any further escalation in the tariff. I think that's been taken as a sigh of relief, and some of that long dollar positions got pulled back. More recently, as you mentioned, the rally in the euro, which to me I think is more of a relief rally on the back of the German election results, have contributed to the decline in the dollar. But I don't think we're going to see further downside to the dollar from here, because the broad fundamentals that are supportive of the dollar pretty much still remains. Yes, there are some concerns about the US growth at the moment, but it's largely driven by the soft data and the sentiment data that has come down. But some of the hard data and broad economic activity in the US is still pretty firm, and we're expecting the Fed to hold off cutting rates as a result of that. So I think eventually we'll see the dollar rebound.
Especially if reciprocal tariffs kick in 1st April onwards, you think that would be the case?
Exactly,
that would be the catalyst?
Exactly. And we know that it's coming. I think markets, for the time being, have sort of pushed that to one side. But once we get more clarity around not only reciprocal tariffs, but there's talk about tariffs by sectors, right? So already we have the 25% tariff on steel and aluminium. There's talk about semiconductors, on cars, on pharmaceuticals and lumber. So we know there's a lot that's going to be coming, which if it's implemented will be basically dollar supportive.